Hello, hello. Good morning. Good morning. Welcome to another ES Futures trading stream. Today is Thursday, December 7th. Today is a special day. Um, it's a personal special day. Um, the market is coming from a day right now. And now we have a solid rejection of higher prices yesterday. And the main thing of this week is that we have balance. No, we have 3 day balance. Notice what's happening with value. We have this day, this value here, this day. This is inside value, and this is overlapping value. Well, 3 day range here inside a 10 day, a bigger range here, which is a breakout of this 2 day balance. This breakout has been bought multiple times, and also this area here around the 45.80, something like that, also has been sold multiple times. Yesterday we don't have a, the day before selling came exactly from halfback, and yesterday came exactly pretty much POC, which is also this higher, but very mechanical selling. And the intraday from yesterday, it was a really nice trading day we have yesterday. The thing is, it was very mechanical. Huh? See, for example, counter exactly from halfback, then the couple ticks from next period, couple ticks from previous period high, and so on, right? Very questionable high here, another questionable high here and here, and finally we have at the closing, we have a spike to the downside. A spike to the downside, and we just form a distribution, a lower distribution, a small thing here. We'll come back to this. I'll come back to this in a minute, because before doing that, what I want to do is I want to check. I want to check my bigger time frames charts. What's happening in the other time frames. And to do that, I need to open my TD Ameritrade account. Just give me a second, please. All right. Oh, by the way, inventory today, overnight inventory is 100%, pretty much 100% short. Notice how many times, traders, when traders saw what happened yesterday, they just keep selling the overnight, but they couldn't get lower. Like notice 1, 2, 3, 4, 5, 6, 7 times sold from this area, then more here, 2, 4, 6, 7, 8, 9, 10 from this level here. And what is going on right now, I can say that this is maybe a rebalancing of overnight short inventory in progress now. Now, I'm going to close this. What the? All right. So yesterday, now we have higher volume yesterday, higher than the previous day. And let's check. Look at this. This is, I could say, regular. It's not that, this is good. Something like this is good volume, but this is not bad, but I won't say it's excellent. It's great, right? Higher than yesterday, though. All right. Let's see. Now that I have today, the expectation, if I have some continuation of the movement, I will expect at least this much of volume in the first period. Now, if the market, can you see what the market is doing now? Market is inside the range area. This balance. Okay, the market has come back to balance. One particular thing that we have from the overnight, it has a very prominent POC here. If I can join this 3 days, right? Now notice where this value area is. Market profile, session split on today's. I don't want to do that. Because I don't want to do that, man. Alright, what else? Okay. This spike, this distribution, okay, brought the market lower, right? We have lower prices here. If the market opens inside this range, this balance range, that's a rejection of lower prices. And this adds another day, it may add another day to this balance. Balance days usually have more opportunities, but shorter, okay, short, or fewer gains. I don't expect something big to develop out of this. That's the expectation. Doesn't mean that's going to happen. And remember, context is everything. All right? We have really good context yesterday. We talk about the balance we have here, excess. My bad, no excess. Opening way up here corrected this high, and when a gap is going to be filled, usually it happens right away. Usually the volume comes right away from the opening. I'm gonna replay this because this is really interesting what happened yesterday. I hope I can show this to you right now. Got here, I got this replay. I'm going to replay yesterday. Create. Okay. Play it. Come on. Okay, now it's played. But I don't see price. Oh, it's way up there. Okay. Okay. Alright, it is 9:11 in the replay. Notice where this high is. Low, settle around this area. Multiple distributions in the overnight. Traders got very excited here. And this also you have to see in context, right? You have to see things in context from yesterday. But context is very important. You have this area, The same kind of trade that happened a couple of days before this day, a sequential trade. We had the same thing the previous day. Sequential trade here, and the previous day as well. Okay, what is a sequential trade? You got weak highs. You got 1, 2, 3 highs, 4 highs. You can consider this one also. And look at the lower side. this area here, 1, 2, 3, 4 times bought. And the trade is the opposite side. I'm not going to say, I'm not saying that the trade is sell the opposite side, but that's in the odds. Now, let's keep playing this. Market is going to open. Should I go a little bit slower? I'm going to put this at 20 times or 15 times. Let's see, 26, 27, 927, 928, 929. 15 times faster, okay? That's 15 times faster. Notice, notice here what happened here. Right. So far, so good. We have a gap, go with the gap. The trade guidelines are go with the gap that does not fill right quickly. We have a significant gap to the upside, 4600 right there. I'm going to add some days because okay, I want to see this thing, this day here. All right, it's right there. We were talking about, you know, that a couple days before, you know, I was expecting something, you know, some rally. I wanted to sell a rally here, but the market didn't give us a rally, and not in that time frame. The rally came after. All right. I want to see, I want to show here. Really nice taper here. Taper here. First, right at the opening. Yes, look at this, only 2 minutes here. Volume dries here and volume dries up here. Really, well, pretty much nothing here. Something that I don't want to see is hundreds. Okay, that's what I want to show here. Is whatever direction this market goes, it can go to the upside. Remember, there's a 4600 here. Notice where this high is from, but this is just a couple ticks from this high here and from POC of this day. But that is just one piece of information. Then reference in the lower side, you got this, you got this, you got this one. What else? Closing the distributions here. What the heck is this? I don't know. This it doesn't. And this one, maybe this one as well. No, that's I know if a market selling, buying from this is a high, overnight high, POC, value area high, this day high, 4600. A market selling, buying from this reference is just an indication who is doing the trade, who is behind, who is doing what. Nothing else. Nothing else. Okay? Now, something, if I am long here, because my mentality is go with the gap that is not filled right quickly. If the gap is going to be filled, it's going to fill, the volume comes right away from the opening. Now, I am seeing here opening kind of like a couple of ticks. I did not see that before. Can you see? What do I have here? You know, market open and sold from that level. I think this is a glitch here. Well, I don't know. This thing was an indication, you know, conviction in one direction. I don't see that here. This may have gave me some doubts. Okay. Here it comes. Look at. Did you see this? Can you see this? Hundreds here. No thousand. No nothing. There's just, you know, this is a strong contraction to this inventory here. Right. Overnight inventory. Overnight inventory is pretty much 100% long, and this is it can be a contraction to long inventory. And that's one action. Next thing is, if this inventory is going to be taken out, you know, because there's weak longs here. And remember, from this day, the overnight from this day, is was very short, 100% short. Market opening up here took care of this inventory. What do I mean with that? Traders we tend to forget things really quickly. Look at this. All this. Right? This short inventory. We were talking about the weak, the short inventory in weak hands. This is long inventory in weak hands. Short inventory in weak hands. And this contract is has only 2 more weeks to go. Now, who's going to keep this contract? Who wants to sell or buy this contract just 2 weeks before expiration? Now, check it out. Where the market is buying here. Overnight POC. I'm going to speed this up a little bit here. Now, I'm going to go trend. Did it came to halfback? It didn't came to halfback. It came to this high. This low is not good. Absolutely bad low, but I have tapers. You have some tapers here. I like something, but the context, right? The context of this is completely different. The taper here is completely different. For example, the taper that can happen here in this day, or here in this day. Now I see something interesting here. I see 20s. Did you see where the market stopped here? Where the market was bought? Market opens, opening here, rally, bought here. The rally did not come to this level. Here, I have not paid attention to this level actually, but what the market did here, it didn't get up to here. It was sold from that level, took this level out. Next thing on the lower side, this level. Next thing, this level. Every single one, is being bought. This one has been traded. I don't care about those ones anymore. Now, what's the reading here? Market is back inside previous day range. Market closed the gap. Closing the gap, coming back inside previous day range. Actually reached the opposite side of this range. The main thing, this level has been corrected, has been checked. Settings. All right. What is this level? Here, I have a reference. It's the closing of the overnight distribution. What's the next one? Value area high. Who's buying there? Who buys those levels? Right. So the buyers that are coming into this selling, the buyers that are coming to buy this market, are not the particular strong hands. Now, closing these distributions, if the market closes these distributions here, it will erase validity to whatever happens afterward. Okay? So the selling I won't consider that serious, right? That's one thing. Let's see what happens. Notice where the selling is coming from. Selling coming from previous period held back. So this is a weak reference. And that's why I have here for 84, that's why I have this level market today. Okay? And also have these other ones because something similar happened afterwards. The market did not get out of previous day range. Not get out of previous day range, not close the distributions here. No, it's not yet. This is not a good level, this one. It's not a reference anymore. This could be coincidence. Now this is not good. Now this is not. Now the also this level being taken increases because this is saddle. No, I don't saddle. This is not good. Notice what's happening with volume. Higher, medium, higher, low. It's a terrible idea to be a buyer here. Now this level has been corrected. I'm going to leave this one here because this is seller. This is window trader seller. I don't remember where the CME seller was. Now you can see some buying coming from seller right there. Now, gosh, did you see where it stopped? They stopped right at POC. Who is buying there? That's the question, right? Again, who is buying there? Next thing on the lower side, you may have this area, this value area low. The ultimate destination can be this low actually, this non-excess low here. Repairing this low. I wanted to show what happened here, right? Those hundreds, I don't want to see those hundreds, those are really bad. You know, but for context, the main thing is context. The market coming from, you know, because this is a breakout balance. Bigger opportunities come when the market is out of balance. Either because of continuation of the movement or when the market is brought back inside balance. And that puts the opposite side of balance as a potential destination trade. This is not good. No, I don't like that one, the upper side. I have this one first, right? This one first, I don't like this one. This level is also very close. This level is very close to this one. Now, where G is, look at the type of buying that's happening here. Okay, this has been corrected. Now, next thing. What is the next thing? This one, right? I think this market now, look at where the selling is coming, right? This is just a market in the process of becoming too short here. Market is becoming, inventory is getting short at this moment. If I was selling here, when the market gets back inside this range, this is a good area because you have location here. Selling in here that's something I wouldn't do. When I start to see something like this, traders selling rally, every single rally was sold here. This one, this one, this one, this one. Just a couple of ticks from previous high, right? And the risk of being short here is increasing in the short time frame. In the short time frame, risk is getting higher. But I can expect, I can see maybe bigger time frames selling here that can hold positions, right? Which would be hedging actually, and not this contract but March contract here. Now this has been taken, L late in session. This is a breakout. You know, this low has been taken. This one, which was the potential or the ultimate destination trade, has not been taken yet. Is it going to be taken? No. If this low is not taken, now it becomes weaker. It was questionable. Now has been taken, right? But just a couple ticks. Just a couple ticks. The same kind of trade that happens here. Now this L here takes this 3 white high, poor high here. Technically is good. Okay, technically is good, but For my taste, I wouldn't like to sell. I wouldn't like to be selling here. Now, if I open this area here, what I see is the same area you have, can you see? This area here is being bought. And if I go a little bit, I want to close this. Because if I go a little bit further back, look how many times market has been bought here. It's buying here, weak level here, multiple levels. Here, 1, 2, 3, 4, 5, 6, And now we are having the daily time frame as well. Buying here, from this area. Basically this area here. And every time the market is getting back inside this range. But it doesn't have, so far it has not had downside continuation here. We haven't seen downside continuation here. And I think that has a lot to do, but the fact that this contract doesn't have too much to go, and also the fact that it's end of the year, I think that has a lot to do with that. I want to see what happens next, not this Thursday, maybe the other one. Not this Friday, not tomorrow, but the 15th. Okay, because this contract is going to expire on the 19th. And most of the volume will come Friday night, 15. I expect something coming maybe today or somewhere between the 11 or the 15, because this is a rollover process that now we are witnessing. And I'm going to check now. I'm going to check my bigger time frames. Look at what's happening. This is very interesting here. This still together. Now, this is very interesting. Look at what's happening in the monthly. We have a trend to the upside. Finally, we have but the market still is inside this range. So this will be a critical level here. This 46, 30, something like that. Okay, because the market has no exit. This is a range, 1, 2, 3, 6 month range so far. Okay, you have a range here. And look at the highs, how many times the market has been sold from this level, 46, 33. Remember this number, 33. Okay? And a trend line, a clear trend line. Why I just can't avoid to wonder. What can happen in the market? We have this trend line, we have a break. This is just logical. The market can't buy here, right? Because that's what programs do, what traders do. They see this, they can see these trend lines and just buy from there. Now, the weekly. You got a 4,500, right? Which is the base of the trend line. For the monthly, and look at this, okay? The same trend line. It's not the same, but in the weekly time frame. Multiple times, right? Can you see the trend line here? Up to here, or down here, maybe. Okay. I didn't pay too much attention, but when I see this formation here, this is what catches my attention here. This is where I start to catch my attention, because we have very extended rally, very wide ranges in the weekly time frame. Trend to the upside, 3, 6, or 7 weeks trending to the upside. The lows these lows are quite close, and these ranges are quite close, are quite small, narrow relative to these previous ones. Okay, very narrow range here. Narrow ranges can be toppled easily. You can top a narrow range. The market can do that with ease. Easier. And there was some buying coming exactly from the trend line. The monthly has this 4,500 here, down here, right, which is below the current range. Can now this be a trend? Can now the market sell from this range? I have no idea. Right now, going Oh, and by the way, this is a look below and fail, and now the trade is the opposite side of the range. The opposite side of the range for practical purposes has been reached. Right? Now, this becomes interesting. Let's keep going. Let's keep digging here. This is the daily time frame. Right? 46.33. Remember the monthly? What happened in 4500? This is the monthly, and this is the monthly as well. Also reference in the weekly, right? But what the daily is doing? We have a big range. We have quite a range here, right? 10 days range is not something to to ignore. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, including this one, right? Because this is a breakout, and every breakout has been retested here. Everyone is happening here as well, right? But the support of this break is not this retest, but the breakout of this inside bar. Okay, we have a range, two-day range here, high the inside bar, and notice how many times the market has bought from it. This is starting to look, like a market getting, or at least for me, it looks like a market is getting too long here. Right? When the market tries to go higher, right? Tries to go higher and comes back. Tries to go higher, comes back, right? What's happening here? Comes back to this area. Now, but I want to see something that each time the market just decreases, It didn't happen here. Now you have this one here, here. What can happen? Can we have something like this? Don't know. This is, just sometimes to use the imagination here, but it looks to me like it's getting too high. Now, a market trading in range, looking above and failing, looking below and failing, is a market that needs more information before its next directional move. Now, the thing is, right now, is looking at 46.33. And this is when it becomes really interesting here. When I check this is going to be the next contract. Okay? Look where this high is. Way above the 4600, 46.33. This is 46.50. That's 10 handles above this high. When the next contract opens, all the traders that were watching this level, suddenly will see the market up here, without the market doing anything, quote unquote, anything. Well, because this now is a resistance, but the market will open up here. If today was the last day, the market would be up here, because notice how much we have here, 4,600. Right now, the current market is 45.50. That's 50 point. 45.70. Now it closed 45.50, but now it's 45.70. That's 50 points below. It will open down up here. Okay, and that will put actually this market. So this is just unbelievable, man. Unbelievable, man. All right. The structure that is holding this market is very weak. I got 1, 2, 3, 4 gaps here. Now, I'm going to check my market profile, because that's the next thing I do. The market profile, I have this very questionable law, not just a couple things. I call it questionable, not because of this kind of like 2 ticks of excess, because 2 ticks is technically good, but because the area it came from this area here. You have 4 lows here, half back on this day, and now this is adding. Just can you imagine how much stops do you have in this area below this IJKMH here in this area. Now add that to this here. Add this to this. And add more from here and more from here. This is an area that market is using to buy. The center of this inside bar here. Now, that's the lower side. Okay? This low coming from Halbach, basically. This low coming from POC. This low coming from the 4,500. Absolutely nothing here holding this market. Another weak low here. Multiple distributions. Another weak and poor. Right? Extremely weak. Right? Just remember this. This contract is about to expire. Okay? If these lows are not corrected, that will be history. But the way how it was bought is there's tremendous amount of weakness in the lower side. I'm going to be short. Is that enough reason to be short? No. Or to be automatically short? No. Because most of the things that I do in short term in trading has to do with market rebalancing inventories. Inventories that have got too long or too short. You have a couple minutes to the opening. Overnight inventory has been rebalanced. The market opens up here, it's pretty much taking care of these weak levels here. All right? This level here, this weak level here that we saw in the replay. Lower prices are being rejected, but we have something here, which is a very wide overnight POC. Very wide overnight POC. Okay, let's put things in context. In context, let's keep the perspective. I am going to call the stream in YouTube. I'm going to open Twitter now. All right. Let's see what this market can give us. 1 minute to the opening. I keep the Twitch open, close YouTube, and open Twitter.